world of trading, there's a very grim number. 95% people who enter the financial markets, including platforms like Pocket Option, hoping to make money, end up losing it all. And it's not just a statistic. It sounds like a death sentence for most. But what if I told you it's not about bad luck or some secret indicators or a treacherous market? The truth they won't tell you is that at the heart of all these blown accounts, all the disappointments and shattered hopes, lies one single fundamental mistake. And this invisible enemy isn't on the chart. It's right there in your head. You'll see why the 5 most deadly mistakes we'll discuss today. Watch this video to the end, and I promise you'll never look at a chart the same way again. Now, before we get to the most interesting part, I'd like to remind you that I have a Telegram channel where I post my signals for free, analyze the news market, and share helpful guides for beginners. It's down below this video and also in the pinned comment. So what is this root mistake? What's really behind all those blown accounts? Is treating trading like a casino rather than a serious business. And let's just stop right here for a second. What does the person do when they go to a casino? They place a bet. They hope for luck, seeking excitement, anticipation, the euphoria of winning, and the stinging frustration of losing. It's basically roulette, red or black, and the outcome is almost entirely out of their hands. Chance rules everything, and the main driver is emotion and blind hope for a miracle. Now, let's look at what a business owner does. What do they do in their daily life? They analyze the market, study demand, calculate risks, and invest capital with a clear plan. They have a business model, an accounting system, and a strategy they stick to. They don't hope for a miracle, they manage probabilities. For them, a loss isn't a tragedy, but a calculated cost, part of the process. The main driver is cold calculation, discipline, and a system. Well, the vast majority of beginner traders on Pocket Option, especially with fast turbo options, act exactly like casino gamblers. They don't see the higher and lower buttons, they see them as red and black. They came for quick thrills and easy money, not realizing that trading isn't a game. It's a profession, it's a business. And like any business, it has its own laws and rules, and most importantly, its own costs. Once you actually start to embrace this new paradigm, that trading is a business, then everything will change for you. You'll stop being a victim of circumstances and truly become the manager of your own capital. And it's from this fundamental mistake, this simple, trivial attitude toward trading as a game, that all the other deadly sins, the trader grow, which we're about to break down. Each of the following 5 mistakes is a direct result of a gambler's mindset, not a businessman's. The casino mindset is a total disregard for capital management. Ask any casino gambler what risk management is, they'll look at you with bewilderment. Well, although there are definitely people who calculate risks and think that eventually the machine will pay out and that you can count cards and blackjack and stuff on, what risk management? There are chips, you have to bet them. If you win, great. If you lose, then you have to win it back. A beginner in trading behaves exactly the same way. He might take an account deposit, $100, and immediately start opening trades for 10, 20, 50 bucks. But why? Because his brain thinks in terms of winning. Meaning, if I bet 50, I'll earn 40. He doesn't think at all about the fact that those $50 can be lost very easily. A businessman, however, thinks, differently. Well, by businessman, I'm also talking about traders, naturally. His first task isn't to earn, but to preserve capital. He knows that losses are inevitable in any case. It's part of the job, so he decides in advance how much he's willing to risk in a single trade. And here's the golden rule all professionals talk about. The risk on the first position shouldn't exceed more than 1% of your deposit. That's why when I trade with the guys, from our VIP club, we always split the deposit into 6 steps and always start trading initially with 1% of the total deposit. So if you calculate it, if you have, say, $100 in your account, a 1% risk is a trade for just $1. Boring, right? Many will say, that's just nonsense. Trading for $1? And the gambler's brain inside you is already screaming, what will I even earn from this $1? I came here for big money after all, not to earn less than $1 per trade. Now let's look at this from the perspective of math and survival. If you, for example, start risking right away, 20% of your deposit, which is $20, you only need 5 losing trades in a row for your account to hit 0. 5, and that's if you're opening equal positions. In a volatile market, this can happen in 10 minutes. But if you risk 2% to lose those same $100, you'd need to have 50 losing trades in a row. That's practically impossible. I use a slightly different approach. I divide my deposit into 6 steps, meaning meaning I know I can afford 5 mistakes. But you have to understand that I already have experience. I trade based on technical analysis as well as fundamental analysis. And I use this allocation of funds as a supporting alternative. So we divide the deposit. The first trade is $1. Well, not $1, 1%. Then 2%, then 4%, and so on. And this way, first of all, I can afford to make 5 mistakes. Even after each mistake, I can confidently know that I can go ahead and recover my previous losses. It's very important to understand that poor risk management is definitely a silent killer of your account. Now, what else is present in any casino? Naturally, it's emotions and excitement. Adrenaline of the bet, the euphoria of winning, the despair of losing, and the most toxic feeling, the urge to win it back. That's exactly the hook that all gambling establishments rely on. And that's the hook that 9 out of 10 traders get caught on. And so let's take a look at the 3 main, so to speak, demons of traders. First is greed, or as they otherwise call it, FOMO, the fear missing out. The chart draws one green candle after another, and you naturally think, that's it, the train is leaving, everyone's making money while I'm on the platform, I need to get in right now. You break all the rules, if you even had any, and panic buy into the trade at the very peak. The market reverses and you're left with a loss, not understanding at all how that happened. That's classic FOMO. The next aspect is fear. Yes, here we have the opposite situation. All the conditions met, it's time to hit it, but you hesitate. What if it doesn't work? A pass-failed trade is still stuck like a thorn in your memory. You're doubting and the price moves on without you, and you watch with regret as the trade would have perfectly worked out in your favor. You start panicking and doubting yourself, thinking, what should I do now? Everything's turning around, the price is going where you didn't expect. Fear makes you miss good chances and lock in stupid losses. And thirdly, it's revenge. This is actually the most dangerous point because, for example, you've taken a painful loss. Price reversed a second before expiration, or for instance, well, in the moment, right? The price was so close to the chart, but it still closed at a loss. You feel like the market is somehow cheated you. And you have no idea how many people actually write to me saying that, look, they closed me at a loss on purpose. Even though I always say that you can open TradingView and you can see that the charts are the same everywhere. Without any analysis, you might open a new trade or start trying to win it back, often doubling the amount to get your money back. And actually, naturally, I'm guilty of this too, and I still have moments like that even now. But that's not trading anymore. It actually turns into pure gambling addiction. I also want to note here that, indeed, I believe you can and should always win it back, especially when you follow risk management and build a safety net. But you need to take a short break before that to eliminate the excitement and other negative emotions that make you want to be in the black immediately. So it's best to wait a day or two and then enter the market if, for example, you've had some kind of major wipeout. And the third mistake is trading without a system. Now imagine a person who decided to open a chain of coffee shops, but instead of studying neighborhoods and suppliers, he just goes out to a random street every day. I don't know, sets up a table and waits to see if anyone buys coffee from him or not. You'll agree that's absurd, but that's exactly what a trader without a system does. Today, for example, he trades based on, I don't know, the RSI indicator because he saw some video on YouTube. Tomorrow, he's drawing trend lines because he read an article. The day after tomorrow, he's trying to catch the news because someone said that's definitely the only way you should trade. He has no clear entry rules, no criteria for choosing an asset, and no understanding of when his approach works and when it doesn't. Every trade he makes is essentially pure improvisation in the moment. He just looks at the chaotic price movement and tries to guess where it's even gonna go. And that's not analysis, it's just guessing. And the result of such an approach is random. And over time, considering the broker's commission, it's, well, just a fluke that always leads to a loss. What even is a trading system? It's essentially your charter, a clear set of rules that leaves no room for doubt or emotion. Your system should answer key questions, right? What are you trading? For example, only currency pairs or only crypto. And even with currency pairs, when I was just starting out, I always held the opinion that it's better to be a professional on one currency pair than to keep jumping from one thing to another. Then the indices, then the, I don't know, some funds or something else, right? I actually always traded initially only on euro dollar and pound dollar. Everything was great and fine. Yes, it's clear that the market is changing now, and you need to add many more currency pairs to catch the whole range of news. But I believe that initially, you can choose just one currency pair with good capitalization and work with it. After that, once you've decided where you're actually trading, you need to decide, when do I trade? For example, only the London session, while avoiding any news. And after that, you determine what your entry signal is. For example, I don't know, I trade using the RSI indicator. Or I'll wait for a moving average crossover when bouncing off a support level, right? Once you've defined that for yourself, you only open positions at those moments. After that, you determine what your risk management is overall. Yeah, so I've already talked about how to choose the strategy that suits you best. It's either trading with equal positions but opening with a slightly larger amount and maintaining a high win rate, or not relying on a high win rate, properly distributing your deposit over 6 steps, and covering losing positions by making the next position 2 to 2.5 times larger. And the next point is, at what point you stop trading. Make plans for yourself that either I trade 2 hours a day, time's up, that's it, you stop, or upon reaching a certain amount. Say you've earned 10% on your deposit, 20% on your deposit, you stop trading, that's it. And then you choose which comes first. Either you finish those 2 hours of trading, or you earn a certain amount of money faster. And creating and testing such a system is exactly what building your trading business is all about. Yes, it's boring, painstaking work, but it doesn't give you that adrenaline rush like random trades do. But that's exactly what separates a professional from an amateur. A professional builds and fine-tunes their mechanism. A gambler, on the other hand, is always looking for a magic money button, jumping from one super strategy to another. And in the end, naturally, they're left with nothing. By the way, speaking of a systematic approach, if you feel it's hard to build such a system alone, that you're just drowning in this chaos of information, then I invite you to join my private Telegram. I don't just hand out mindless signals there. I share my market outlook, analyze my trades from a systematic perspective, and help members create their own trading business plan. It's not a magic pill, it's a workshop for those who are ready to put in the work. I'll leave the link in the description, and now let's get back to the mistakes. I'd also like to talk to you about martingale, because many people think it's just like a casino, a casino strategy and so on. Naturally, if you're a beginner, if you come into trading and you just mindlessly open all your positions, relying only on doubling your bet to constantly cover a losing position, then yes, sooner or later, it all leads to a total wipeout. But if you use the martingale strategy simply as a supplementary strategy for risk management, that's a different story. Because to hit 6 consecutive losing positions based on technical analysis, or to trade the news with such poor results, you'd actually have to try pretty hard. In other cases, you'll actually make quite a good profit using martingale. But let me repeat, this strategy should only be supplementary to your risk management, not the main one, where you're just randomly clicking up or down. Of course, it's up to everyone to decide how they want to trade, and it's vital to understand that wipeouts will happen eventually, but proper deposit allocation and timely withdrawals, like withdrawing all profits at least once a week, will truly protect you from almost any mistake. And the last mistake on our list is, shall we say, another sign of not wanting to be an independent trader. It's an attempt to shift the responsibility for decisions onto someone else. And yes, we're mostly talking about copying other people's signals from Telegram channels. I'll say right away that I think this seems like the perfect solution for beginners. And indeed, for my part, I even try to run my Telegram channel in such a way that anyone can join. First, check out the educational materials, and second, trade based on signals to start getting into the flow. Into all of this, to start understanding like how I open positions, for example. Even when I give signals, I write it out, then the analysis. I explain why I opened here, what the market situation is right now, and so on. And if you look at this as a learning stage to become an independent trader, it's really a very unique tool. But I'm categorically against it when a person wants to, come in and get all the information and have everything done for them, so they just come in, sit there mindlessly, copy all the trades, and make money. That's it. So there are, unfortunately, many people like that who don't really want anything except easy money. And if you realize that you've come here for the cases, so to speak, of a successful trader, watched how I trade and want to just click up, down, and constantly make money, then that's an illusion. First of all, yeah, well, with me, at least I'm still showing everything honestly, but you have no idea who's sitting on the other side of the screen, who that person is. And here, for example, I build the process, so to speak, of training for my guys from the VIP group in such a way that you learn. And that's exactly the scariest part. If you come in, just copy and don't learn, don't develop, yeah, then you essentially remain an operator who presses buttons on command. And what will you do if there's no person giving out these signals? Yeah, if, I don't know, like YouTube stops working, Telegram stops working, and, well, anything can happen in our lives, right? What will happen to you then? Or, I don't know, what if I just decide I don't want to film videos anymore? Don't want to give signals anymore? Of course, I have no such desire. But in that case, you'll be left with nothing, without money and without knowledge. And that's exactly why people who are already immersed in the world of trading will naturally think about how they can trade independently, how to make decisions themselves, because it's their responsibility, their money, and like their business. And you shouldn't look for someone who will do the work for you. Essentially, the only path to success is to take responsibility for yourself. To study, analyze, make mistakes, draw conclusions, and get back into the fight. Every single one of your independent losing trades that you've analyzed, definitely. The point is, analyzed is 1,000 times more valuable for your growth than a random win from someone else's signal. Analysis must be done in any case, always, because if you don't analyze your wrong actions, don't analyze your deeds, and I'm not even just talking about trading here. I mean, this can probably be applied to absolutely everything in life. If you realize that something is going wrong for you, you've done an analysis, you understand why such a situation arose, for example, why you lost that money, how it even happened, you've done an analysis and try not to make such a mistake in the future. So basically, in this video, we've gone over 5 deadly mistakes with you. Essentially, yeah, it's going all in. Emotional trading, no system, martingale, and blindly copying signals. But now you see that these aren't 5 different problems. They're essentially 5 heads of the same hydra. And the name of this hydra is treating trading like a casino. As long as you're deep down hoping for luck, looking for easy money, giving in to greed and fear, you'll definitely lose. You'll be a gambler who's always beaten by the house. And the market is that very house that, over time, always wins against the gambler. And that's exactly why the path to those coveted 5% of successful traders lies in changing your mindset, killing the gambler within, and birthing a true trader businessman. Start treating your deposit like a company's authorized capital. Write a trading plan like a business plan. Keep a trade journal like financial statements. Analyze losses not as a defeat, but as a bad investment you need to learn a lesson from. And here's a simple but incredibly powerful tip. Before you open your next trade, just wait for 5 seconds. Ask yourself one question and answer it honestly. Am I acting now as a calculating trader following my plan, or as a gambler hoping for luck? This one question, asked time and time again, can completely change your trading and separate you from that crowd of 95% that is doomed to fail. Stop being a gambler. Become the owner of your own small, so to speak, business in the financial markets. And if this video was helpful to you, then I suggest you subscribe to my channel and also give it a like. Write in the comments which of the 5 mistakes you're most familiar with. Admitting the problem is the first step to solving it. And thank you for your attention. Good luck in building your, so to speak, trading business. See you later.